This is Bob Anderson, and today is day 2 of my trading journey of Apex funding of my 4th trading account. That's what we're going to focus on, is my 4th trading account. And so today was one of those days that I am actually rewarding myself for doing these videos, because today was one of those days where the discipline that I get from having to sit here and document what I did during the day has kept me out of trouble. And I'll show you what I mean here in the charts. I had 2 entries, 1 trade, all into one trade. Went up about $200 and some or so, rolled over, and I had my stop at even. I was looking for $500, and it knocked me out. I'll show you that too. But during my normal trading hours, I missed one opportunity that set itself up, and then I'll show you why I stayed out of other potential opportunities. Because there's a little trick on these charts that keeps me out of trouble. So anyways, because I would have lost a lot of money if I didn't know the little trick. So let me just show you the chart here in a minute. That's my 1-minute chart again. And as I've told you, I trade off the 1-minute chart and I use the 5-minute chart as my indicator of what's going on. 5-minute chart, just to give you an example, here is the 8:30 time frame, and here is 9:30, which is the open. So you see how you can see so much more about what's going on with 5-minute candles than you can with 1-minute candles. I mean, you can see that the market, all pre-market, was just consolidating. That's really not the type of trading pattern that works in my trading style. So anyways, and then over here, this is the trade I ultimately ended up taking. It was like at 11:30 or so, 11:40. We'll go over that on the 1-minute chart. I don't trade after 10:30 normally, but I had a conference call at 11. It got done about 11:30, and I looked over at my chart and I went, oh my, there's my one and only trade for the day. So anyways, here is my 1-minute chart that I trade off of. And I kind of marked some things. So see how I put news over here, 8:30. It's normally about the time I like to look to start. Well, we had news today at 8:30. We had building permits being announced. We had housing starts being announced. Those kind of things can make the market act erratic. So I wasn't going to trade around this time frame anyways. And we had a downtrend here. And honestly, based on my trading strategy and the fact that it lined up with my 5-minute chart, I really missed this pull down, pull up, entry here, second contract here, target here, bam, that'd have been $500, just like that. From the first candle, which would have been at 8:44, till the close, which would have been 8:53. So it would have been about 9 minutes for that to happen. And it was absolutely perfect. I mean, it rolled right up. It broke through our pivot here. See that? Lined up with my 5-minute chart as a downtrend. Pulled up into my gold line. So you had your entry there. And then the break of your shortest candle, which would have been an entry right here on this candle of 8:46, and bam, down you go. And if you watch some of my charts over time, you'll see that there's quite a few people that are playing something similar to that, because there's certain trades that you get 3 points out of, certain trades you get 5 points out of, and ironically, about right around the time that you hit that 5th point or your 3rd point, market kind of rolls over and softens. But anyways, so I missed this trade. Now I'm going to be perfectly honest with everybody on here because that's what this is all about. I have a really hard time seeing shorts, even though they lay out just like longs. And this trade right here is literally the trades that I took yesterday on the long side. I just have a really hard time seeing them on the short side. It's just, I've always said if I could just flip the chart over and be trading it upside down, I would do much better. So anyways, then we get into this consolidation. There's nothing here to worry about. Just like I showed over on the 5-minute candle, there's no trading in here. You can't trade it when you're just going side. When these moving averages are flat, forget it. That's just money stealing time. That's when your money's going to get stolen. That's when you're going to get chopped up. Forget it. Now I notated over here market open. Market opens at 9:30. Normally I like to kind of pay attention all the way to about 10:30. Which is right. Hold on, let me get it over here. Right in here. Okay, so why did I not take, say, the pull up and the rollback trade here? Well, I'm going to tell you why. This right here is this is an indicator that comes up on my chart every day, and it's the current day open, not the open of the market, but the open, not the open of the 9:30 market, but the open of the previous day when the market opens back up, when the futures opens back up. That plots that line, which was 42.94.50. And I'm going to tell you something. It's a little trick. They have a tendency to fight. Traders fight to keep it below that or above that, below that or above that. And if the moving averages are below that line, which of course they were, the 5-minute moving averages were way below that line, it's very hard for price action to go up and through that current day open and stay there. If you'll see how it goes up multiple times and pulls it back down, goes up multiple times and pulls it back down, goes up multiple times and pulls it back down. That is just a phenomenon that you just have to know about in trading. And that same thing called the current day open is a real interesting line to pay attention to in the oil market too. I can tell you that. That's where I learned it from, was from the oil market. But I noticed it does the same kind of reactions here in the ES too. So it's like a dividing point. And as long as you're moving averages, let me go over here. As long as you're moving averages, this red, green, and yellow, as long as they stay below this area, that's where the pricing is going to keep pushing its way back. If you'll notice, the trade I did take, which is right in here, I'm going to show it to you on the 1 minute. I only took it after the yellow line had come across this open area, and we started breaking the daily high. That was to me, that was like, okay, check of my trading strategy. I'm never going to take a long on the other side of the current day open if these moving averages are still below the open. And same thing in reverse. I'm never going to take a short on the other side of the current day open if these moving averages are up here. You're not going to do it because there's just too many forces bringing it back to equilibrium, bringing it back towards those moving averages on either side of that open. See how it did it here? Did it here? Did it here? It just keep pushing it back down. Anyways, so back over here on my trade, on my actual trade that I did take, because I take them off the 1 minute chart. So my point is, this kept me out of chop. There's a lot of long trades that certainly set up per my plan, other than this thing being in the way. And I could have just gotten my head chopped right off, chopped right off, chopped right off, chopped right off. could have been just eating, taking longs and getting knocked out on the short side. So I just stayed away from it. Look at all this consolidation. There's nothing there. There's nothing there. Then we had a little breakdown here. That didn't work. And then we started going long. This was at 1040 here. And look at this break the highs here. It goes up through the open, the current day open. And as I showed you on the other chart, the 5-minute candles finally start, 5-minute moving averages finally started rolling with it. And so, bam, touch of the gold. It was a break of the high, break of the pivot. See, this is the pivot area, the pivot high. Broke it, rolled back into my moving averages. I took a long here, took a long at the break of the candle. It rolled up, rolled back down, out at even. Listen, I had a chance for a $500 trade with literally no heat. So I don't really care that I don't really care. And I don't pay attention to the 11, like I said, I get done at 10:30 normally. I just happen to look over at the chart. So anyways, I did take that trade. I was in, let me see here, my two entries on my funded account. 43.0350 at 11:36. That was a terrible fill, by the way. That was terrible fill. And then 43.04, which was the break of this candle right here. That was a good entry right there at 11:38. And then it ran right up. And that really, I know it's hard to believe, folks, but that really got about $200 positive before it rolled over, ticked me out, broke through those lines, and I said, okay, forget it. Now, interestingly enough, when it broke those highs, look at what it did again. Just keep right on going. Keep right on going. And then rolling over. So there was a nice run right up here. There was some good money there. But anyways, so the point that I'm trying to make here is that my previous 3 funded accounts, I'd have been in there fighting and punching and clawing and trying to make some money and getting chopped up. But because I have to sit here at the end of the day and hold myself accountable in this video and put it out for the world to see if anybody wants to watch it or not, doesn't matter either way to me, then I held myself accountable to following my trading strategy. It was right there. I'll take that trade right there, this trade right here, I'll take that all day long based on where my moving averages were on my 5-minute chart, what kind of price action through the high, down. I will take this trade all day long. And the reality of it is the trade actually worked. I just don't allow them to roll against me and if I go up a certain amount of dollars, I don't allow me to lose money on the trade. I just don't. It's just the way I have a break even that kicks in on 2. We'll talk about entries at another time. I have entry strategies, 2 different entry strategies, and my charts automatically put me at break even after a certain number of points go in my favor. So I don't have to actually touch anything. I just let the chart work for me. I don't do the touching. It trades for me, which is another really cool feature about using, and this is all free. All these indicators, all these little things that I've got on here, this is all free in your Ninja. It's just all free. I don't pay for nothing. I don't pay any gurus to create me a trading strategy. And the way I do my automatic trading, that's all free too. I just programmed it in, pretty simple, real simple. And there it is. So anyways, I am proud of myself, to be honest with you. So I had a choppy morning and I stayed out of it. There was only really one good trade. And to be perfectly honest with you, the fact that it took over 9 minutes to work is not really my ideal. I like them to thrust from my entry and move towards my target, or at least have me in really good position, within a minute or two. I really do. And normally those are the reactions I get based on the way I do my entries. So even that one would have been a little difficult for me to sit there and watch for 9 minutes and not get a little stressed that it's going to roll up against me. But anyways, that's it. That's day 2. So I had a $0.00. I showed it right there between the two entries of 3.5 and 4.0. That makes my average 3.75. Both stopped out at 3.75. So 43.0375. So break even. I lost a few bucks in commissions. So no big deal. Hopefully tomorrow's a little more active in the morning so that I can be a little more active and give some, possible good entries. So anyways, that's it. Have a good day. I'll talk to you later. Bye.